Welcome to the Return of Title IV and Clock Hour Programs presentation. We thank you all for being here, and I hope all of you have had lunch. If not, you may want to just go out and get it because this is going to be a long haul on RTT4, but we thank you very much for joining us today. My name is David Musser. I'm with FSA's Policy Liaison and Implementation Office, and with me is my colleague Scott Filter, who is with the Office of Post-Secondary Education. So we're going to put up the agenda here for you today. Take a look at that for just a moment, and these are all the topics that we're going to cover. All right, so we're going to start with some basic principles of the Return of Title IV calculation. Basic principle number one, Title IV funds are awarded to a student with the assumption that the student's going to attend school for the entire period that we awarded the assistance for. And the second assumption is that when a student ceases attendance, the student may not be eligible for the full amount of the funds that the student was scheduled to receive. These are the underlying principles of Section 484B, Big B, in the Higher Education Act, which is the statutory language that authorizes the Return of Title IV process. So when you and your colleagues award Title IV federal student aid and the student ceases enrollment, you are charged the responsibility of determining the amount of funds that the student earned and following the requirements that the statute implements and returning any funds that are owed back to the department. So some more basic principles here. You can see from the first bullet that Title IV funds are earned on the basis of seat time, essentially the number of days that the student has attended, and in the case of clock hour programs, the number of scheduled hours that will have elapsed when the student drops out. Mathematically, there are really only three possibilities in this slide. So as in the second bullet, the student has withdrawn just at the point where the amount dispersed equals the amount earned. And if this happens, you might as well forget the RTT4 calculation and go buy yourself a lottery ticket because it's your lucky day. In the third bullet, the school has dispersed more than what the student has earned, so the unearned portion must be returned to the department. And in the final bullet, the student has earned more than what's been dispersed, so a post-withdrawal disbursement is required to be offered consistent with the requirements in 34 CFR 668.22a. And just a quick note, 34 CFR 668.22 is the regulatory section for all of the rules that we're going to describe today. So if you ever really want to dig into Return of Title IV, and that's a good starting point. So still some more basic principles. While I indicated earlier that students earn their Title IV funds based on seat time, that is true up to a point based on the initial bullet on the screen. Once a student has completed more than 60% of a payment period or period of enrollment, the student has earned 100% of the Title IV funds for that period. So we essentially give them a cutoff and say that they are eligible for everything after that 60% point. And remember that it's more than 60%. So if they earn exactly 60%, it's just 60%. But if they earn 60.01%, then they've earned 100% for the period. Institutional or other refund policies, so state accrediting agency policies, do not impact the amount of Title IV aid that's earned under Return of Title IV calculation. Although a school, state, or agency refund policy will determine the amount that the student owes ultimately to you after the student withdraws, those policies do not affect the amount that you actually return to the department. Finally, the schools should use the best information that they have in order to identify a withdrawal date. So institutions that are required to take attendance are always expected to have a procedure for monitoring attendance. But other schools that are not required to take attendance may actually have records of attendance, and we'd hope that you use the best possible information when making a determination. For clock hour schools, you're all required to take attendance, so we always will want you to have the most accurate way of doing that you can. And we'll go into more detail on that later in the presentation. All right, so consumer information. The requirements in the separate section of the regulations, and this is 668.43, provide that institutions have to provide consumer information to enrolled students as well as prospective students regarding Return of Title IV and the school's refund policies, and those are established by the state, the accreditor, and the institution itself. So students should be provided with an understanding of the interplay among all of these policies and their net effect. So for example, when a student ceases attendance early, some of their federal student aid might be returned, and then their bill may not be available. And so, for example, you might have a student who withdraws at the before the end of the 30-day period. He's a first-time borrower, and so they're not eligible to receive their loan if they withdraw. And then they still have tuition charges because the tuition refund doesn't cover all of for the time that they enrolled. So how does that student's bill get handled, and what are the student's options for paying that bill at the institution? So among the many things that we expect you to provide to consumers, those are some of the things that we're talking about when we refer to as consumer information. So failure to begin attendance. If a student never commences attendance for the payment period or period of enrollment, the student is not an eligible student for Title IV funds for that period. So Title IV or RTT4 does not apply. And all of the student's Title IV funds must be returned. In part, this is due to the fact that the student never established eligibility for those funds. So if you have a case where a student does not reach the next payment period, the student is not eligible for anything for that payment period. All right, so now we're going to dig in a little bit and take a closer look at how RTT4 calculations are performed piece by piece. Later in the presentation, we'll actually go through a full case study describing how this all plays out for an individual student. So step one, the institution determines the precise amounts of Title IV aid for which a student was eligible at the time of the withdrawal, including amounts dispersed. And you see that column is on the left-hand side, and it's A and B, and amounts that could have been dispersed. And you see that column is to the right, and the bottom is C and D. And so you have to add all of those up to determine the amount the student has earned. Step two is the institution calculates the percentage of the period that the student was scheduled to complete upon withdrawal. If greater than 60%, the student has earned 100% for the period. The numerator is the number of hours that the student was scheduled to complete at the time of the withdrawal, and the denominator is the total number of scheduled hours in the period. Step two is the only step that's treated differently between clock hour schools and term-based credit hour schools. For clock hour schools, you're using the scheduled hours rather than days attended. And in the past, it was completed hours. But for all RTT4 for clock hour programs now, you're always using the hours the student was scheduled to complete at the time of the withdrawal. All right, steps 3 and 4. So you take the percentage that was calculated in step 2, item H, and multiply it by the total amount of Title IV aid that was dispersed or could have been dispersed. And so you remember that was what was calculated in step 1. We added up all the Title IV aid. And that's how you determine the amount of aid earned in step 3, item I. So you can see that on the far right-hand side of the screen in blue. So we're back to what we discussed earlier, namely that there are only 3 possibilities. Either the amount is greater than the amount earned is greater than the amount dispersed, in which case a post-withdrawal disbursement is required. The amount earned is less than the amount dispersed, in which case a return is required. Or the amount dispersed and the amount earned are equal, in which case enjoy your retirement. All right, so step 5. If a return is required, the institution then has to determine the amount of unearned Title IV funds that the institution, is required to return, as opposed to the amount that the student is required to return. The amount of funds due from the institution is calculated by adding up all of the institutional charges incurred by the withdrawal date, and then multiplying the total by the percentage of the period that the student did not complete. And you can see here, this is the part of the worksheet where you do that calculation. You're essentially doing a comparison to choose the lesser of the result of in box K versus box N, and this is designed as a protection for you, the institution, to ensure that you're not actually returning more to the department more than you actually received from the student, because this is determining the amount that you kind of took in as the institution because of the amount that you charged the student at the time of the withdrawal. And we move on to step 6. Once the institution determines the amount of Title IV aid that must be returned, you must determine the actual Title IV aid that must be returned, and that's in the statutory order. And you can actually see the full statutory order here on the page. You probably can't see it very well on the screen there, but unsubsidized direct loans, subsidized direct loans, Perkins, and then plus loans, and then it goes into the grants beginning with Pell Grants. And so you always make your returns in that order once you've identified the amount that needs to be returned. And then remaining steps. Once the institution has determined the amounts of each type of unearned Title IV aid that it must return, any remaining unearned funds that were dispersed are the responsibility of the student. So once you've returned everything that you, the institution, is responsible for, then you have left what the student is responsible for. Remaining unearned Title IV loan funds, so that's direct loan or Perkins funds, must be repaid by the student in accordance with the terms of the loans. So that means that essentially they have a loan, they're going to return it to the department over time in payments. There's nothing else to be done with loan funds that are the student's responsibility. But there's also remaining unearned Title IV grant funds. If greater than 50% of the total grant assistance dispersed for the period, those grant funds that are the student's responsibility are considered grant overpayments. But the institution must notify the student within 45 days of his or her obligation to repay those funds. And that's really important. We'll talk a little bit more in a moment because the student who owes an overpayment to the department is not eligible for Title IV aid at other institutions until they get that overpayment covered. So it's important that you let them know that that's out there and that they need to find a way to pay it back. And here's some rounding rules, and this is an important set of things to know all the time when you're doing RTT4 calculations. You calculate first to 4 decimal places. So the example here is 220 clock hours over 450 scheduled clock hours equals 0.4888. You would then round to the 3rd decimal place. So you got your 0.4888 equals 0.489, 48.9%. And then you always remember to round up at 5 or more. So for example, 0.2445 equals 0.245 equals 24%. It's really important that you understand these items, especially if you do hand calculations, and probably most of you don't, but if you do, these are vitally important because these are, Return of Title IV is annually one of the top 10 program review and audit issues. It's always something that is complicated and difficult, and this is an important thing to understand as you go through them. And then now I'm going to turn it over to my colleague, Scott.
Thanks, Dave. For a clock hour program, the institution may use either the payment period or the period of enrollment. However, you must be consistent for all students within a particular program. And here's a graphical representation of the differences between a payment period and a period of enrollment. So here are some examples to reflect the differences in using those two methods. In this first example, a student leaves when he or she was scheduled to complete 45 hours in a 900-hour program. So under the payment period, you have the total number of hours of 450. Student completed 45 of those hours, thereby earning 10% of their Title IV aid. As you can see, they had Title IV aid that was dispersed or could have been dispersed of $2,000. Therefore, they earned $200. In the period of enrollment example, you would include that second payment period. So you have 900 total hours. Students still completed 45 as they're in just in that first payment period, so they've earned 5%. However, here you can also see that the financial aid from the second payment period was added for a total amount of Title IV that was dispersed or could have been dispersed at $4,000. The student has still earned $200 of that. By contrast, see what happens here. The student leaves when he or she was scheduled to complete 550 hours in a 900-hour program. So for the payment period, we're in that second payment period, so there's still just that 450 hours. And the student completed 100 of those hours because the first 450 was from a separate payment period. Here they if you do that calculation, they've earned 22.2% of their aid. Again, we're still looking at 2,000 of Title IV aid that was dispersed or could have been dispersed. So using that payment period here in this example, they earned $444. However, if you use the period of enrollment where you combine those payment periods, you still have the total number of hours of 900 and the full hours that were completed of 550. If you do that calculation, they've earned 61.1% of their aid, or since that's over that 60% mark that David previously mentioned, 100% of their aid. Therefore, if you look at that, they had the total Title IV aid that was dispersed or could have been dispersed of $4,000. They earned all $4,000. And next we're going to talk about the withdrawal date. In a clock hour program, a student's withdrawal date is the student's last date of attendance. And the institution uses the number of hours the student was scheduled to complete as of the withdrawal date to determine the numerator in the R2T4 calculation. In a clock hour program, a student is considered to have withdrawn if he or she does not complete all the clock hours and weeks scheduled in the payment period or the period of enrollment. The scheduled clock hours used in the student's R2T4 calculation must be those established by the school prior to the student's beginning class date for the payment period or period of enrollment. And remember that there are two components here. Unlike in credit hours, clock hour programs must be concerned with schedule hours as well as weeks of instructional time, and that can create some significant difference. Scheduled hours must have been established in accordance with any requirements of the state or the institution's accrediting agency, and these hours must be consistent with the institution's published materials. For example, before the start of the school year, if we were to look at your 16-17 catalog and a program was to be taught as a 1,000 clock hour program, you could not teach that as another level of clock hours, whether it was higher or lower. Scheduled hours in the numerator of the R2T4 calculations do not include hours scheduled on days when a student was on a leave of absence, or extra or makeup hours that were not part of the student's normal schedule as published in the institution's written policies. The date of determination is something quite different than the withdrawal date. It's basically when you become aware. This is the date that the institution has determined that a student has withdrawn, and the institution must have a process in place that will determine when a student's absence is a withdrawal. In a clock hour program, that process must ensure that the institution's determination that the student withdrew no later than 14 days after the last date of attendance. Again, for institutions required to take attendance for clock hour programs, they must have this process in place. And remember, it does not have to be 14 days. It can be less than that. And many of you do this on a weekly basis. Part of what you would do is just see if someone stopped attending. They may be sick and planning to return, but they might not be coming back. Eventually, you'll have to make an administrative decision on whether that student is a withdrawal or not, but you'd have to make that by that 14-day mark. So some deadlines for R2T4. Within 30 days of that date of determination, the institution must perform the R2T4 calculation, notify the student of any grant overpayment, and notify the student of eligibility for post-withdrawal disbursement. The institution must return the Title IV funds it has the responsibility to return to the department within 45 days. And the institution must make the post-withdrawal disbursement to the student within 180 days. And there's a really good table in Volume 5 of the Student Aid Handbook that lays these deadlines out very clearly. It's good to check through your procedures to make sure that they're working and that things happen in a timely fashion. And it's much better for you to make that determination rather than have an auditor or program reviewer determine that there's a problem. Next, we'll talk about a leave of absence. A leave of absence is a temporary interruption in a program of study instead of a withdrawal. And the conditions for an approved leave of absence is that there's a formal written policy and that the student followed that formal written policy in requesting the leave of absence. There must be a reasonable expectation that the student will return from the leave of absence. The school must approve the requested leave of absence in accordance with its policy. The student may not be charged additional institutional charges. The number of days on an approved leave of absence cannot exceed 180 days within a 12-month period. And loan recipients must be told about the effects on their grace period if they do not return. So to break that out a little bit more, with a formal written policy, it must require that all requests for leave of absence be submitted in writing and include the reason for the student's request. It must require that requests be signed and dated. And it must require that requests to be submitted in advance unless unforeseen circumstances prevent the student from doing so. And unforeseen circumstances may be something such as a car accident or something beyond that student's control, and then you can have them do it retroactively, but it should be close to the occurrence of the leave. So there are no additional charges for students on a leave of absence, including a minimal re-entry charge, which would not be permitted. If your institution has a policy that charges a student something like $100 as a registration fee when they return from a leave of absence, then you do not have a leave of absence policy in accordance with 668.22D, and your students would not get a leave of absence for R2T4 purposes. They would be considered a withdrawal. No additional Title IV aid may be given while a student is on a leave of absence. You may not award additional Title IV aid to that student while on a leave of absence. But you may disperse grant funds that are already awarded, but you may not disperse loan funds. You may grant multiple leave of absences, but a student may not spend more than 180 days on all leave of absences in a calendar year. And for this purpose, the calendar year is not a January to December thing. It starts with the beginning of the first day the student goes on their first leave of absence. So if you give a first leave of absence today, then your calendar year starts today. And it did not begin at the start of your academic year, your fiscal year, or the calendar year. So for the next 12 months, you will look at the aggregate of all leave of absences for that student to ensure that they do not go over 180 days. If a student's leave of absence does not meet regulatory requirements, the student must be considered a withdrawal as of the last date of attendance. If the student fails to return from a leave of absence, the student must be considered a withdrawal as of the last date of attendance. And that date of determination is the date that the institution discovers that the student will not return, but may be no more than 14 days following the end of that leave of absence. And for NSLDS, enrollment reporting must be adjusted to report the student was a withdrawal as of that last date of attendance. And now I'll turn it back over to Dave.
All right, thanks, Scott. All right, so now we're going to talk a little bit about institutional charges. And for the purposes of an RTT4 calculation, institutional charges include charges for tuition, mandatory fees, room and board, if the student contracts with the institution for room and board, expenses for required course materials if the student does not have a real and reasonable opportunity to purchase the materials from a place other than the school. And there's an important exception here. An institution may exclude the documented costs of unreturnable equipment and the cost of returnable equipment if not returned in good condition within 20 days of withdrawal. So these are things that you do not need to include in institutional charges in those very limited circumstances. Remember that institutional charges are what you use to determine the portion of unearned federal aid that you, the institution, are going to return. So schools must ensure the inclusion of all appropriate fees as well as applicable charges that we just mentioned. We have a more thorough discussion of this in a policy document from January 7th, 1999, so a little ways back. But you can find it on IFAP by searching for the phrase policy guidance January 7th, 1999. And there's some more information about what we consider to be institutional charges. So if an institution completes its return of Title IV calculations using payment periods, but the institution charges for a period that's longer than the payment period, the quote, total institutional charges incurred by the student for the payment period, unquote, is the greater of the prorated amount of institutional charges for the longer period or the amount of Title IV assistance retained for institutional charges as of the student's withdrawal date. That's a very important consideration. You need to know which one is larger in order to know what you're going to include in your return of Title IV calculation. So just be careful about that if your institution charges for longer than a single payment period. All right, and now we're going to move on to the amount of Title IV earned. As we mentioned before, an institution needs to determine the total amount of aid that the student is eligible for as of his or her withdrawal date, and that includes Title IV dispersed as well as Title IV that could have been dispersed. Aid that could have been dispersed is an important topic. In addition to aid that was dispersed, and that's a little easier to identify, you would include aid that could have been dispersed if the conditions for late disbursements in 34 CFR 668.164 G2 were met prior to the withdrawal date. So there's several different ones for different kinds of aid. For all aid, the department has to process an official SAR or ICER with an official EFC. For Perkins or FSEOG, the school has to have made the award. For direct loans, the school has to have originated the loan. And for TEACH, the school has to originate the grant. So some other conditions that I want to mention to you, if a student's SAR or ICER contains a comment code that requires resolution, in order for the funds to be included as aid for could have been dispersed, the underlying issue must be resolved before the institution performs the calculation and in time for the institution to meet any applicable return deadlines. Another note, school may not include as aid that could have been dispersed any Pell Grant funds that, if dispersed, would cause the student to exceed his or her Pell lifetime eligibility used. Similarly, a school may not count as could have been dispersed any direct subsidized loan funds that, if dispersed, would cause the student to exceed his or her 150% maximum eligibility. So just a couple of restrictions on what we can include in the calculation. If a student's total aid, aid that could have been dispersed plus aid dispersed is greater, then the amount that earned is going to be greater as well. So if you have more funds in the could have been dispersed category, it results in a smaller amount to be returned or in a larger post-withdrawal disbursement. So, but remember, the aid in this calculation must correspond to the period for which you were doing the RTT4 calculation. So that means if you're doing it on a payment period basis, it's only the aid that you're including for the payment period. If it's on a period of enrollment basis, it's for the entire period of enrollment. So we're going to go through a couple of examples here to describe how these things play out. So example A, we have a first-year student that begins on September 1st, withdraws on September 28th, and they have a direct loan for $1,000 that's been originated, but it has not yet been dispersed because of the 30-day delay rule that the institution is subject to. So you would include the $1,000 loan as funds that could have been dispersed, but these funds cannot be dispersed as a post-withdrawal disbursement because the student was not actually eligible for them due to the fact that they hadn't completed the 30 days. The institution includes these funds because they had a valid ISR on file and they originated the loan before the student withdrew. Remember, those requirements for the including aid as could have been dispersed are on that prior slide, so that's an important one to remember. However, you can't actually give the funds to the student because they didn't meet that 30-day requirement. But including this may end up either, again, reducing the amount of grant funds that the school has to return, or increasing the amount of grant funds that the school actually ends up doing as a post-withdrawal disbursement. All right, example B. A student is in a 900-hour clock hour program that uses period of enrollment for its RTT4 calculations, and that student withdraws when he was scheduled to complete only 100 hours. The first $1,312 of loan funds have been dispersed. In that case, you would include that $1,312 as dispersed, but you would also include the remaining $1,313 as aid that could have been dispersed. Remember, no additional loan funds can be dispersed beyond that $1,312 because the subsequent loan disbursements cannot be made because the student hasn't completed that payment period yet. Once the student has withdrawn, you can't make those subsequent disbursements until unless the student has actually completed the period of enrollment. All right. Now, amount of Title IV earned, a little bit more. The institution is required to determine the earned and unearned portion of Title IV aid when the student ceases of enrollment prior to the planned completion date of the payment period or period of enrollment. So up through the 60% of the payment period or period of enrollment, a student earns Title IV on a pro rata basis, meaning that the RTT4 calculation will spit out the amount, the percentage the student has earned. But after the 60% point, the student has earned 100% of Title IV aid. Also, the return calculation is still required even if the student has earned 100% in order to determine whether a post-withdrawal disbursement is required. So you need to be sure that you have provided all the Title IV aid for which a student might have been eligible. We're actually often asked if schools are required to complete RTT4 calculations for students who have earned 100% for the period. Strictly speaking, the answer is no. But the school still has to document that the student received all the Title IV aid for which he or she was eligible and that the student completed more than 60% of the period. So in a lot of cases, it's just easier to complete a calculation for those students just to be sure. You're going to have to document it anyway. All right, and then earned and unearned funds. And this is pretty straightforward, but it's important. Earned funds are the percentage of Title IV grant and loan assistance equal to the percentage of the payment period or period of enrollment that the student actually completed. Again, so the example, student A begins his program of study and withdraws after completing 10% of it. And then in the clock hour programs, that means after 10% of the scheduled hours have elapsed. Therefore, student A has earned 10% of his or her Title IV funds. Unearned funds are the percentage of Title IV grant and loan assistance that has not been earned by the student and is calculated by is essentially the counterpart of the percentage earned. And for example, the amount of the same student's unearned funds is the counterpart of 10% or 90%. So for your student who earned 10%, the unearned portion is 90%. So possible outcomes of the return of Title IV calculation, we've already told you these. Either the amount of Title IV funds exceeded the amount earned, so you've got to return something. The amount of Title IV funds is less than the amount earned, so a post-withdrawal disbursement must be made. Or the amount of Title IV funds equals the amount earned, in which case, again, go get yourself a lottery ticket. So then we want to talk a little bit about post-withdrawal disbursements now. So post-withdrawal disbursements need to meet the late disbursement requirements in 668.164G. There's post-withdrawal disbursement must be made from grant funds before loan funds, and a post-withdrawal disbursement comprised of grant funds may be used to pay the following current charges: tuition and fees, and then room and board if contracted with the institution, without specific written notification from the student. An institution must make post-withdrawals of grant funds within 180 days of the date of determination that a student has withdrawn, and a school has to disperse to the student any funds that were not dispersed to a student, any grant funds that were not dispersed to a student's account, no more than 45 days after the date of determination. So as I just mentioned, with post-withdrawal disbursements of grant funds, No student confirmation is required to pay current outstanding charges, and for all the things I just mentioned, tuition, fees, room and board, or for prior year charges up to $200. Written confirmation is required for all other current charges. If you disperse it directly to the student, it must be dispersed as soon as possible, but within 45 days of the date of determination. And for post-withdrawal disbursements of loan funds, we have a whole slew of requirements. Post-withdrawal disbursements for loan funds must be made within 180 days of the date of determination. A post-withdrawal disbursement cannot be a second or subsequent disbursement of a direct loan. Post-withdrawal disbursements of direct loans cannot be made if the student was a first-time, first-year borrower unless they completed that 30 days, or if your institution is not subject to that requirement. The institution must offer the student or the parent, in case of the plus, the loan post-withdrawal disbursement within 30 days of the date of determination and request confirmation that the student accepts the post-withdrawal disbursement. And that's important because you're actually only offering the loan, the post-withdrawal disbursement. You can't automatically give it to them. You have to give them the option about whether they want it or not. And the institution must obtain authorization to pay things for other than current year charges. All right, so there's a number of notifications for post-withdrawal disbursements of Title IV loan funds. Again, this is very important. This is what you have to do to let the student know what they're eligible for and ask them whether they would want the post-withdrawal disbursements that are available to them. So within 30 days of the date of determination, an institution must notify the student and, again, the parent if it's a post-plus loan, and explain that the borrower may decline all or a portion of the loan funds that they're eligible for as a post-withdrawal disbursement. The institution must then request confirmation of any amount to be credited to the student's account or directly dispersed to the borrower. The institution has to explain the obligation to repay the loan, and then the institution must specify a deadline of at least 14 days for the required response. If the response is late, the school may decide not to disperse. If the school decides not to disperse, they must tell the student in writing. And if you get no response from the borrower, then no disbursement of the post-withdrawal disbursement of the loan is required. And with that, I'm going to turn it back over to Scott.
Thanks, Dave. So if funds to be returned are the institution's responsibility, the institution must return those funds within 45 days of that date of determination. And the return is considered to have been made when the institution deposits or transfers the funds into the school's federal funds bank account and then awards and disperses the funds to another eligible student, or returns the funds to the department electronically using the refund function in G5. And please note that to complete all of this, you also have to make the corresponding changes in the COD system. Now we want to go on to some miscellaneous items related to R2T4. The first is related to credit balances. Once an institution is aware of a withdrawal, it should hold all credit balances until the R2T4 is calculated, and it's calculated any institutional charges after its institutional refund policy has been applied. A student may be left with a grant overpayment problem that may leave the student ineligible for any Title IV aid until it's resolved. So when you have a credit balance after an R2T4, you should use it to pay down that grant overpayment first. Once that's been paid, you can pay the remainder to the student. And of course, you have to release credit balances within 14 days. For students who withdraw and re-enter a clock hour program within 180 days and the school performed an R2T4 calculation, the institution must treat the student as if they did not cease attendance for the purpose of calculating Title IV awards. That includes redispersing aid that had been dispersed and returned in the R2T4, dispersing aid that the student had been eligible for that hadn't been dispersed, and canceling any overpayments that were assessed to the student as a result of the prior withdrawal if those funds were dispersed upon reentry. And more information can be found for this at 668.4F. If the date the student returns is outside of a loan period, the school must agree to extend the loan period or originate a new loan with a new loan period that begins with the date the borrower returns to the school and extends to the end of the original loan period or the program, whichever is sooner. And if the student re-enters the same clock hour program after more than 180 days, the student is treated as a transfer student beginning a new program, and the institution treats the hours remaining in the program as if they are the student's entire program. If verification is not completed when the R2T4 was calculated, you would return any interim disbursements of aid subject to verification and do not include them in the R2T4, and only include unsubsidized and plus loans in that R2T4, and only if those had been originated prior to the student withdrawal date. If the verification was completed later but within the verification deadlines, Then the school would perform a new R2T4 calculation using additional eligible aid as aid that could have been dispersed. And a little bit just on FSEOG, and neither of us are FSEOG experts, so please don't ask us too many questions on this. But there are some specific rules related to R2T4 with FSEOG. And what's important to note is in the first two, you're matching the funds on an individual level, and then the third one you're matching on the institutional level, which comes to mean something different in the R2T4 calculation. So for type A, which was that first two, the individual recipient match and the aggregate match, only the 75% of the federal portion of the FSEOG award goes into the R2T4 calculation. However, with the fund-specific match, which was the institutional one, where we cannot determine what percentage was from the non-federal portion or the federal portion, you would include 100% of that in the R2T4 calculation. And now we're going to do a full clock hour R2T4 calculation case study. So this is our student, Jordan. Just some items of note there. 900 clock hour program over 30 weeks, using the payment period for their R2T4 calculation. The period start date was April 1st and ended on October 25th. You can see there the cost of attendance profile, and then the Title IV award. They're receiving a Pell Grant and a non-subsidized direct loan. Try not to overthink that and wonder how that might have happened. It's just for the purposes of this example. So some other information. Jordan starts the program on April 1st. And on May 3rd, the retention specialist is told by Jordan's program director that Jordan has not been attending classes since April 20th. Jordan is contacted and has been ill, but plans to return to class the next week, which is within the excused absence policy, and is consistent with state and accreditor policy as well. On May 3rd, when attendance is checked, the retention specialist finds that Jordan had not returned, and so Jordan is administratively withdrawn. So the withdrawal for that purpose is the last date of attendance, which was April 20th, which was when 90 scheduled clock hours were completed. And for the purposes of the date of determination, that is May 3rd. And the school requires that the students obtain all books and supplies up front at the beginning of their program, which will come in a little bit in the calculation. So in the step one is where we pretty much list all of the dispersed aid as well as the aid that can be dispersed. So on the left-hand columns that end in columns A and B, you can see where those numbers exist for the Pell Grant and the unsubsidized direct loan. For Jordan's profile, there was no extra aid that could have been dispersed, so you see those numbers are 0. And then for Jordan, we are also assuming that she is not a first-time borrower and that all loan funds were dispersed within the first 30 days. So on the right-hand column, you can see that all that aid has been added up. So the total Title IV aid that has been dispersed or could have been dispersed is $3,930. Going on to the next steps. Again, we show that Jordan's withdrawal date was on April 20th, her last date of attendance. And then that was 90 clock hours that were scheduled to be completed. Since we're, again, using the payment period for this R2T4, that's 450. So we show that the percentage of aid that has been earned is 20%. When you then multiply that in step 3 towards that $3,930 amount, that was the aid that was dispersed, we show here that Jordan has earned $786 of their aid. So then we subtract that number, that $786, from the full amount that was dispersed to determine the total amount that needs to be returned, and that amount is $3,144, which you can see in the lower right column. So next we determine what that amount, that unearned amount is from the school. So in step L, you can see that the tuition has been added, and you can see that there's a books and supplies amount of $500, which is a little different than what was in the institutional profile a few slides back. And we can assume here that the school provides books and supplies on the first day of class and retains the full amount for those for both payment periods on the first day. And you can note that this would mean that the institutional charges completed for an R2T4 during this first payment period would be higher than if this were for the second payment period, where that amount would be zeroed out. And that also might mean that the school may have to return a bit more. So then we determine the percentage of unearned Title IV aid, which, as we discussed, was the complement to the earned amount. So that's 80%. So we take the $5,000 of institutional charges, multiply that by the 80% of unearned charges, and come to find that amount is $4,000. Then here we compare that back to the previous box K, and we take the lesser amount, which is $3,144. And again, this is a protection for the institution, so they're not returning more money than they actually received. And then in the next step, we return funds by that statutory order that Dave mentioned. So we take the full $1,930 from the unsubsidized direct loan, and then the remaining comes out of the Pell Grant money. So total amount returned was $3,144 from the school. And then as you can see, the next step, that there's no money left required for Jordan to have to repay those student loans because the school returned all those funds. And that also means that Jordan is not responsible for any funds herself, as it has all been returned by the school. And we're almost finished with the presentation before we open for questions. But we wanted to make sure that you're aware of the free software tool that the department provides to schools to calculate R224 when students withdraw. And you can see here at the bottom that it's circled at the bottom. It's called R224 on the web. And this screenshot is from the FAA Access to CPS online website where you can access it. And these are the instructions on how to sign up for the R224 on the web if you prefer to do it that way. Here are a long list of other resources that go back some almost 20 years on R224. If you ever feel like you need some additional information, feel free to look there. And I'd also point you to the final regulations published in 2010 and the resulting Q&As that might relate to anything on modules. So I'd like to open it up for questions now. We do ask that you use the microphones in the center of the room as this is being recorded. Please introduce yourself as well, and we'll start in the back.
Hi, I'm Sharon.
Hello, Sharon.
So I have two questions. I think one will be quick. On LOA topic first, are we allowed to approve an LOA of a student who tells us they have a personal issue that they would rather not describe that they're taking an LOA for?
Well, it would depend on what your policy allows for.
Okay.
Yeah.
I mean, our policy just dictates they're supposed to provide in writing what's going on and why they need an LOA, but at the same time, it's kind of hard to tell a student, you have to tell us what your personal issues are specifically, but I mean, if we say that, we then have to say we can't approve it without the actual issue?
So essentially, your policy, well, number one, it does need to be clear enough so that you
Right.
can identify which things would or wouldn't fall into this kind of weird gray category. So you may want to think about that with the policy itself. But if they give you at least a general description, and personal issues is a description of the reason why they're taking the leave. So as long as it fits into your policy, then for now that's fine.
Okay, and then the other one's not gonna be as easy of a question probably, but I'm looking for clarity into how you define determining scheduled hours.
Okay.
So we are a modular school. We have start and end dates for each module. Successful completion means earning a passing grade.
Okay.
You don't move forward without passing your courses. So if you fail a class, you retake your class.
Yep.
At the point, if they drop, let's say after failing their first mod, they're in their second mod and then they withdraw, do we do scheduled hours based on what they would have done in the second mod had they passed the first one? Or is it only the first one because the second attempt is a retake?
So it's a good question.
It's plagued me for years.
So remember that there's a difference between the requirements for receiving a subsequent disbursement of Title IV aid
Right.
and the scheduled hours for purposes of calculating a return of Title IV for a student. For purposes of getting another disbursement, it's successfully completed hours, which means that you ignore that time the students spent in that first module if they fail it. So those are not hours that count toward the student's next disbursement. For RT4 purposes, scheduled hours are scheduled hours are scheduled hours. So whatever it is that you scheduled for that student, regardless of whether they complete it or not, if they've taken that time and gone through that portion of the program, that counts towards their total number of scheduled hours. And in some cases, we've had schools say, our student was scheduled for 960 hours out of 450. What do we do with that? And that you just give them 450 over 450 when that happens.
Right.
And that can easily happen if a student is behind schedule, is failing classes, et cetera.
Yeah.
But the scheduled hours are established before the student begins, generally. And the only way you can change the way that the scheduled hours accrue is if you publish it and they can clearly describe it to students. So in this case, it's whatever, even if they fail it, you're still counting those scheduled hours as they go.
Okay.
I'm fine.
Okay, I have several questions. Let's start with the institutional charges and the R2T4.
Okay?
You said that if the books and kits were a cosmetology school, sorry, I'm Marge Stimson from Academy of Hair Design in Springfield, Missouri.
Hi
Little
there.
plug there, but, our kits, once they're opened, cannot be used by anyone else. So once they're opened, then sanitation-wise,
Yep.
they're done.
Yep.
So would we include those kit prices in the R2T4 because we can't reuse them? They can't return them?
Yeah, the way that I recall, it's not, if things are non-refundable, then they can be excluded. And it's one of those very limited sets of things that can be excluded from institutional charges. So that's
Okay.
right, those kits can be excluded. And, or if the student returns it to you, but it's not in condition that to reuse again, that cost can be excluded from institutional charges. And that, take a look at that guidance that I mentioned. I know it's a little obscure, but it actually gives very, very specific and clear information about when that things are and aren't institutional charges. It's not going to talk about R2T4, but if you just see the word institutional charge, that's what that's the thing that has to be included in the calculation. So,
Okay.
yeah.
The other thing, when we're talking about, we charge by the academic year. Of
Okay.
course, we pay our FSA as a pay period,
Okay.
okay? So we've been doing the R2T4 as a pay period.
Okay.
Our cosmetology program is 1,500 hours. So when you say period of enrollment, I'm thinking in the full 1,500, or do you mean the 900 like an academic year?
Okay. So you generally, if your program is 1,500 hours, right? And you define your academic year as 900 hours, and is it 26 weeks?
27.
27. Okay. So 27 weeks. So your academic year is 900 hours, and your period of enrollment is really the same as your academic year. It's
Okay.
900 hours if that's the way that you conduct the calculation.
Okay, so we have a choice to do it by the pay period?
Yeah, either it would be 450, or as if you did it on the payment period basis, or it would be 900 if you did it on the period of enrollment basis.
Okay. If we do it on the period of enrollment for our Cosmos, do we have to do it the same for our barbers who are just 1,000 hours?
Nope,
So-
you do need to do it the same for all students in the same program,
program.
but it's program by program.
Okay. Another question with the period of enrollment, if you have programs, our esthetician and our manicuring are 750 and 600. So do we do it by pay period, or do we do it by period of enrollment?
Again,
Does it-
you can choose. You could, if you did, in that case, your period of enrollment would be 750 or 600, depending, and your payment period would be half of that. So if if your program is shorter than an academic year, the same things apply.
It's still doing that?
Yeah.
Okay. The other one, we were talking about when a student does not start, and you said something about overpayments, that was it, overpayments. This would be if a student started and there's a grant overpayment.
Okay.
Who actually notifies NSLDS? Is the school responsible for notifying?
So, well, you actually have several options with overpayments. So one option is you could just pay it yourself. Most schools don't actually choose that because you have to pay out of your own pocket essentially, even though it's the student's responsibility, but it's always great if you can. Second option is to set up a payment plan yourself for the student. You have to do that within the 45 days, but once they're on that plan, you don't necessarily need to submit it to NSLDS unless the student goes away and ceases paying you. Or you can submit it yourself to NSLDS. And if you do that, it's out of your hands, and now it's in the federal realm. We're going to collect on it. And once we start collecting on it, the student's not eligible for Title IV aid anywhere else. So that's what happens.
And we are not required to make an arrangement for payment.
You are not.
With our school.
You can submit it to NSLDS, but it is detrimental in many cases to the student when that happens. But you're
But-
always allowed to do it, yeah.
But we have to notify them, give them that
Yes,
45 days
that's correct.
notification.
Yep.
Okay, I think that's it.
Okay.
We'll go to the back.
Well, you answered some of my questions. Just a simple thing here.
I think we're going to the back real quick.
I had an overpayment question as well. You had said if a student has an overpayment due and a credit balance from the R2T4, that the school should return the funds for the student before giving the credit balance to the student.
That's right.
But don't we need to have something on file to return funds on behalf of a student?
If
like
if you
written?
have an outstanding overpayment, that's enough for the department. That it is reason enough for you to take that credit balance and pay down their overpayment, because essentially that's a debt owed to the department. You do have to let the student know that that's what you're doing,
Okay.
but we don't need any other documentation of the reason that occurred in that case.
Okay.
It's a very specific case, because you're right. In every other case, the student has to request a reduction in the amount that goes to one place or another, or a reduction in a loan, for example.
Okay, great, thank you.
Sure.
Becca?
Just a quick question. Does the department offer a demo to practice these type of things before we actually do it?
So I know that so the software that Scott just mentioned, you can set up a dummy student in that software. People sometimes, I think, get a little nervous about setting up non-students in the software. You do have to have a social security number, but you can type in whatever numbers you want. And I actually believe that there is a demo version of the FAA Access website available. I don't have enough information to tell you that. You might want to check with the FAA Access folks in the resource room. But you can always do sample calculations on the department software before, and those have no impact on the actual regulatory compliance of your institution. At the end of the day, what you retain, if you have to retain the calculation that you end up doing for an individual, and you have to make the returns and post-withdrawal disbursements, but you could do as many sample calculations as you like on that software if you wanted to.
And what is that called, that software?
The software is called Return of Title IV on the web, and we have the slides up here that you can take a look at if you go to our FSA Conferences website. There we go. This is what the screen looks like, and it's on the FAA Access to CPS online website, which has a lot of tools for institutions, but one of them is Return of Title IV, and that's where that module is. And the software is neat. You punch in all the students' information. You may have some sample calendars and sample charges, and it spits out the actual worksheet, the RT4 worksheet, once you're done with it.
Excellent. Thank you so much.
Okay, thanks. Any other questions? We got
I'm sorry.
No,
It's
no.
me again, Marge. Okay. We were talking about if a student comes, they start school, they leave, they start on November the 1st, they are terminated on November 29th. We have a default rate where we can go ahead and draw
Okay.
down their loans.
Okay.
So we've done that. Does that affect how much of that loan will go back, or?
Nope.
No,
So
it's still
once
going back.
once you've dispersed it, if you're not subject to the 30-day delay, you've dispersed it, and it just goes
Okay.
into the calculation as dispersed.
Okay, great. We also mentioned credit balance. I've made notes when I remembered this, and I've got to think what it is, pay period. Okay, so we have a credit balance. There's two different credit balance. One is the credit balance just from the financial aid received compared to the institutional charges. We have to pay back within 14 days. Say we've ordered the money, we've got the check, the student is gone
Okay.
and hasn't come back.
Yep.
And they say they've terminated. We don't give them the check because they're not in school.
No. You have to give them any aid for which they're eligible. And the reason I say that, depending on what the RT4 calculation spits out, if they're eligible for a post-withdrawal disbursement, number one, you have to notify them and do all of those things,
Right.
and they may not respond, and then you don't give them the disbursement. But if they do respond and they do tell you that I would like to have this money, if the money that they get exceeds the charges at your institution, they are entitled to that credit balance, and you need to find a way to get it to them. Now, we do have cash management requirements for uncashed checks. If you tried to send them a check and it just goes uncashed, you have to eventually return that money to the department. I think it's like 280 days, and don't
Right.
quote me on that because I don't remember the exact number. But that is a requirement. You've got to provide the money to the student to the best of your ability.
Okay. So we don't actually return that if the student doesn't want the loan. We don't return it until after we get the R2T. I'm just concerned about the 14-day regulation of getting it to the student.
Well, so what you're describing is you've dispersed the aid. It's in the student's account.
Yes.
Okay. And then are you saying this is a case where they've withdrawn, but you haven't provided the credit balance to them yet?
Yeah, I've ordered the check. They withdrew before the check came in the mail.
I gotcha. Okay. So what you would do is sort of follow the steps that we described. So the disbursements are, it's in the account, and now there's a check that the student is owed. Really, you've made the disbursement. You've made the disbursement to the account. So the check is the student's. It happened before the calculation occurred. It's not a post-withdrawal disbursement. It's just
Okay.
you're giving the money to the student now. So you would still get the check to the student. If the student never cashes it again, you've got to give it back to the department. But the money should go to the student at that point. It's his or hers.
And the full amount that's dispersed will be on the R2T4.
Well, remember, right? So yeah, that's right. If the check that you sent is too much, for example, if the return of Title IV results in a lower amount, then you're going to have to find a way to recalculate. You should hold the check. You shouldn't give that because you may have a different amount after all of your tuition refunds are calculated, et cetera, if that's what you're getting at.
Yeah, that's what I was wondering,
gotcha.
because I know the check's would be less
Right.
if there was anything.
So
like
yeah,
that.
if the student had not earned 100%, then yeah, I understand now. You would want to you have to make sure that the correct amount is going to the student before you release it.
Okay.
You don't want to give it to them
That's
and
the
then take
point
it. Try to
then.
get it back because you're never going to get it back at that
Right,
point.
so if I know that it's over 60%, then I give it to
Yep,
them.
you could do that.
Okay,
Yep.
got it. Thank you.
Yeah.
We're a school of allied health professions, and our students have to pass both background and medical clearances
Okay.
as part, within the first month of enrollment.
Okay.
If they don't, and we let them start,
Right.
assuming that they're, because for class time,
Yep.
it's not a problem. It's when they start their clinical rotations that they have to have these clearances.
Yep.
If at the end of the first month they don't have these clearances, we have argued about rescinding the student's enrollment.
Okay.
And if we do that, is it still a return to Title IV?
Yes.
Or is it the fact that we rescinded it and not terminated them count as they never should have been admitted?
It's a good question, and the answer is it's still an R2T4. It's a question that we've gotten at almost every presentation that we've done on this topic, and like I said, it's a good one. Many institutions, they call it retroactive withdrawals, they call it rescinding, and effectively they're saying that we interpret that you were never there, that we shouldn't have charged you, you shouldn't have gotten aid, et cetera. But that's not how Title IV works. And the reason for that is the student did incur expenses for attending your institution for the time that he was there for that month. And if he's owed a portion of Title IV aid for that month, we want to be sure that he's compensated for the amount that he should have gotten. So you still have to perform the calculation, determine the amounts that the student should get. If either if you have to return money, he still gets some of that. He gets what's left over. Or if it's a post-withdrawal disbursement, you have to apply that, and you have to provide it to the student. If your refund policy is 100% in that case, then it may be that the student is going to be owed a credit balance at the end of the day, and that's okay because we recognize that the student did put in some time, and this is a compensation for what they put in to do this.
Okay, thank you.
All right.
Hello.
Hi.
Got a question regarding the numerator and determining the scheduled hours.
Okay.
Are we supposed to determine the scheduled hours up to the LDA,
Including the LDA.
including the LDA?
Yep.
So an example of Jordan, who completed 90 hours.
Mm-hmm.
So let's say if that particular course she was in was 100 hours.
Mm-hmm.
So you're telling me that we should include 90 of the 100
That's
in
right.
the numerator.
Give it and usually the easiest way to do it is to say she's there for 6 hours a day. Day 1, 6, day 2, 6, day 3, 6, day 4, and then day 6 and 7 she's not there. There's no scheduled hours then.
Right.
7, 8, and then go on from there. So it's the easiest way is to do every day is a certain number of scheduled hours because
Right.
that way you can on the day that they withdraw you can easily tally it up.
Just wanted to confirm that.
Yep.
Thank you.
Sure.
Just to piggyback on the question he asked before, if you do have a policy that says if a student ceases attendance within the first 2 weeks of the program, and your institutional policy says you refund 100% of tuition, so you do an R2T4 and the student has money that they're eligible to receive, can you use that money that they're eligible to receive to pay for kits that are non-refundable?
Yes. I mean, you always have to look at the way the types of charges that either do or don't require that written confirmation from the student. And I can't remember off the top of my head whether the kit is one of those, but I believe I think it is. Trying to remember, books and supplies I believe are one of the things that can be included. But either way, yes, it's one of an educational expenses that can be covered by Title IV aid.
Okay, thank you.
Yep.
Becca Fent?
Hi, thank you for this session. I struggle with R2T4s with clock hour programs. I come from a scheduled academic year, so I'm still trying to wrap my head around all of it. But I have two questions in regards to scheduled hours and makeup time. The first one will be in regards to makeup time. I think it was on slide 20 where it stated that makeup hours could not be included in the R2T4 calculation. We do allow students to have makeup time during their schedule. So the students are scheduled for 7 hours a day. If a student wants to attend one of our night classes, to then make up any time that they previously missed during some other scheduled hours that they weren't able to do. Those scheduled hours are calculated for payment period progression for subsequent disbursements, but should that student withdraw, then we were not taking those makeup hours out of that payment period because those hours were included to determine a student's payment period progression.
You do have to take them out.
So you do have to take
if
those
they're
out.
optional, if they're not part of every student's schedule, and if it's not clearly described in the policy and how those hours are calculated, then they can't be included in scheduled hours for the return purposes.
But if they're included in the payment period progression, then that's okay if there's a discrepancy because
And
I
they're
know during audit time,
There
they are
often
gonna
there
have
often
that.
will be a discrepancy.
Okay.
Sometimes auditors have a problem with that, but it is kind of the nature of how this policy works. Scheduled hours are different from completed hours, and they work actually very differently. So the fact that they're different is fine, and it should be in this case.
Okay, and my second question related to that is, we have a pharmacy tech program and the students' program is 900 hours with the last remaining hours, I believe it's 120. They are actually in an externship, which is not scheduled. It's based on the contract between the student and the institution in regards to when that student reports for their externship. It's our expectation that they're going to follow the same schedule that we provided for 7 hours a day, but sometimes they don't. And we are unable to determine until the end whether or not the student completed those hours and which days and hours those schedule was completed.
But it's hard for completed hour purposes, it sounds like, but for scheduled hour purposes, if you have an expectation of 7 hours a day, then the 7 hours a day is how you calculate it for return purposes.
Okay, so up until, if we say you're supposed to be done December 20th because we said your schedule should be 5 days, 7 hours a week, but you stay until January 10th, are we reporting that as their graduation date because that's their completion?
Nope.
That they're not?
Well, not until they've completed the program. I think that the hard thing to kind of wrap our heads around, and I mean, it took me a long time too, actually, when I was learning this the first time, but scheduled hours is akin to calendar time. I mean, it really is just, this is the amount of time they've spent in the program. And once they've gotten to 100% of that scheduled period, regardless of whether they've completed anything, they're done. I mean, they've earned 100%. And so you wouldn't consider them graduated until they've completed all of the requirements for the program. But for return purposes, if they withdrew after they were scheduled to complete 100% of the hours in that last period, so whatever number of days that was into the period, then they've earned 100% of their Title IV aid, and that's how the calculation would come out.
Okay, so it will be fine for us, I just want to make sure I have this clarification correct. It would be fine that if we receive withdrawal paperwork that the student withdrew during the time they were in the externship and we did not have the exact schedule that the student was actually there, because we don't do that with the, let's say, CVS or Rite Aid. That's our expectation. They will show up for 7 hours, but they might come for 5. Those days that will be included in that R2T4 up until their withdrawal is okay for our schedule that we say. It was our expectation that you would be there for 7 hours a day, 5 days a week up until the particular date you withdrew.
So that's right, but one thing I want to just be a little careful about is that you still need to be sure that the student is attending this externship, because you've only got that 2 weeks to identify that last date of attendance and determine what the withdrawal date actually is. But if you're doing that, then yes, you're correct. The scheduled hours are whatever you've established as the expectation for your student for that period.
Got it. Thank you.
In the back.
Hi, you had said on a post-withdrawal disbursement for a direct loan, first-time, full-time student within the first 30 days, you cannot disperse the post-withdrawal, even if they're not Pell Grant eligible. So my question would be, on the R2T4, does it just need to have all zeros in there since they weren't eligible, or does it still trigger an amount for a post-withdrawal?
Yeah, it's a good question. So technically, like we always said before, you do have to do the calculation just to show, at least it makes it easier to document that you've taken all the steps that you need to take to ensure that you've calculated whether the student was eligible or not. And you'll actually put funds in the could have been dispersed column of the calculation, and it'll spit out a post-withdrawal disbursement that you should be giving the student, but then you can't. So the student's not going to be eligible for anything, and it's kind of an academic exercise, really, in that case.
So in the file, so we obviously don't need to send them anything letting them know
That's
that
right.
they were
They're
eligible.
they're not eligible for
In
it.
the file, though, like normally you have a post-withdrawal letter, and then you have proof that you sent out the post-withdrawal letter, and then you have like
Yeah.
the days that they're
Yep.
supposed to reply by. So what would you recommend? Do we just
Yep.
put not required, students not eligible?
What I would end up if it was me doing it, and that's just me if I was a financial aid director, I would put some kind of document that says post-withdrawal disbursement was calculated as X. However, student is not eligible for post-withdrawal disbursement because student did not complete 30 days as required under this regulation. And
Perfect.
then at that document, that's all you're going to need, and the auditor will be satisfied.
Okay, awesome. Thank you so much.
Yep.
My question's about inadvertent overpayments. So we do 2 loan disbursements per payment period.
Okay.
And a lot of times on our second loan disbursement, the student may have withdrawn prior to the date of determination.
Okay.
Or actually, I'm sorry, to the day we dispersed the loan.
Disperse,
So
yeah.
their
Yep.
last day of attendance was today, we dispersed tomorrow.
Right.
So I just want to make sure that in that case, we would pull the loan back and then put it in loans or funds that could have been dispersed for that
Oh wait,
portion.
so that's a good question, and I'm glad you brought it up. We didn't get into it. It's an esoteric, but it's an important topic. So first, an inadvertent overpayment occurs when a student has withdrawn, and then you disperse funds after they've withdrawn, but before actually determining how much they should have been eligible for as a result of the return of Title IV calculation. And this could happen, and we recognize that it happens because you can only check for attendance so often. So like you said, they withdrew on Monday. They stopped attending, let's say, on Monday. And on Wednesday, you have a scheduled disbursement. The disbursement goes out. We understand that happens. And then on Friday, you check for their attendance. They've stopped. They've left. And so now you know that you've dispersed probably too much because they haven't completed they haven't gotten too many scheduled hours. So what happens is you do not return the money yet. That's not the first step. The first step is do the calculation and see what it provides, because it's going to provide a post-withdrawal disbursement probably, because those funds are all going to be in the could have been dispersed column. So by the way, and this is the other thing I forgot, inadvertent overpayments are put into the could have been dispersed column because technically on the withdrawal date the funds were not dispersed. They could have been dispersed.
Repeat that, please.
Yep. So an inadvertent overpayment occurs when you disperse Title IV aid. Right. They've withdrawn, and then you disperse after the withdrawal date, and then you determine that after that. So that's an inadvertent overpayment, and that goes into the could have been dispersed column of the return of Title IV calculation. So most of the time it doesn't really matter. It comes out to roughly the same thing as what it would have been if you had dispersed it on time. But there are some narrow cases, and I want to be clear about this, where if you dispersed, for example, direct loans early on time, and then the student's Pell disbursement got dispersed after the withdrawal, it's a big problem, because that means that the student's going to get their loan, but the Pell disbursement is actually going to end up being eaten up, and it's going to reduce the return of the loan. The student's never going to get that Pell. So that's kind of a disaster for a student when that happens. You want to make sure that you get that grant dispersed either before or the same day as your loan in order to prevent this from happening. But to your question, what happens is it goes into the could have been dispersed column. You do the calculation. It's going to spit out the amounts that at the end of the day the student needs to have, and then you need to reduce the amounts that you dispersed to the appropriate levels based on what the calculation provides.
And what if it was the second loan in the payment period? So then that would be a loan that.
So then it's going to have to come. All of that's going to have to come back. That's right. So if you know that the loan is not, they're never going to get any of it, then you can pull that back immediately if that's what you choose to do. But you're going to have to figure out how it plays into whatever, if the student's Pell eligible, how much Pell that they might be eligible for at the end of the day.
All right, cool. Thank you.
Sure. Okay, looks like we got one more.
Yeah, some of us are waiting until the crowd leaves, but no.
Okay. Smart folks.
Yeah, I'm looking at, you're talking about 1999 as a policy statement on institutional charges. And Oklahoma Career Tech has moved towards a lot of our things as an app. Our books are an app, some things
Okay.
as an app. App is a non-returnable item. Once it's purchased, it doesn't neatly fall under equipment.
It's a good question, actually.
And I asked the question last year. I sent an email, never got a response.
Well, I'm sorry to hear that. And
I didn't send it to you, not to you. Yeah. So it's kind of, and it's, if you're doing a lot of, say, our practical nursing
Yeah.
or LPN books that way, you need a chunk of books to get started.
Yeah, it's a question that I don't know the answer to even today. So I do think send it to me one more time. I will even write it down now, and we'll take it up. But I want to be sure I can get back to you with this answer. And if it turns out that it's something that I can get to, we can put some guidance out about, we will. I don't know if that's going to be possible or not. But it's a good question.
And I wouldn't think we're alone. I would think there's a lot of us that have gone to a book as an app or something.
Yeah.
And,
I mean, in the strictest definition, it is non-refundable in that case, but it's also a lot more like a traditional book or supply, and as opposed to a kit that is non-refundable.
And so maybe it falls in that unreturnable condition because you can't resell it ever.
Yeah, maybe, but I can't give you a final answer on that today, unfortunately. But please send me that, and we'll do our best to get back to you and give you a clear answer.
And I kind of heard something for the first time, and I've not been around a long time, but the fact that you could go back, and you didn't say back and forth, you said per program, whether you use payment period or period of enrollment. General guidance I had received in the past was that you needed to make an institution decision about that.
It's program by program.
Okay.
Yep, it's program by program, and you do have to be consistent within the program. It's an issue of fairness, essentially, for the students within the same program.
And so does that need to be in a written policy somewhere?
Yes.
If
And
you're not-
it also has to be described, at least in general, to students about how that works. You don't have to get into the nitty-gritty necessarily in your disclosures, but it matters to students how it gets performed. But it definitely needs to be in your policies that program A is payment period, program B is period of enrollment.
And so maybe that's why the guidance has been that way, because we typically have tried to simplify those policies and procedures as much.
A lot of schools just do it the same throughout all the programs at their school, and that even large institutions tend to have policies that try to be consistent throughout all their programs. But we generally provide that you need to be consistent within the same program, and you have some flexibility between programs.
Okay, thank you.
Okay, in the back.
I've received conflicting information regarding the kit for the cosmetology school.
Okay.
We've been told because under cash management regulations, because they can't purchase it anywhere else, it's considered to be part of tuition and fees, and we need to apportion the charges accordingly. But you have just said if the kit isn't refundable, it's not that way. So what are we supposed to be doing?
So this is another one that I think it would be helpful if you emailed so that we could take a close look at with our cash management counterparts. If you're including those books and supplies as part of the student's tuition, and it meets the requirements to do that in the cash management regulations, am I getting all that right?
Yeah, according to the cash management regulations, it does meet the requirements because it's very few students ever purchase anything else anywhere, things like that. So we've been told we have to apportion the aid out for it in force.
Yep.
But if the student drops, we can still bill it, we'll just be severely underpaid.
Yeah, so because it's tuition, it's an institutional charge. So that's the answer unless I unless I hear differently, in which case I'll talk to you. We can talk a little bit more offline.
Perfect, thank you.
But in general, tuition is always an institutional charge. Yep. Okay.
Well, if you're going to have one more, feel free. We're almost over our time, so we can probably do one more.
Okay.
If we're doing a period of enrollment on our cosmetology, the student has been there for, say, 484 hours.
Okay.
So it's over the 450, so it would have been the second pay period.
Yep.
So we would be using her scheduled hours as of her last date of attendance, which would be 650 hours,
Okay.
okay?
Yep.
So we're using all of their scheduled hours.
So yeah, that's right.
Okay.
It'll be 650 over what, at 900? Yeah.
900,
Yep.
okay. So if we're doing it by the pay period, then she only, they want to know, at 450, it looks like she would have the 200 hours that she was, because she's at 650 on her last
It would be
day of
200 over 450 if you did it by payment period.
Our third-party servicer says it can't be that way. It has to be at the time that she hits 450 in her actual hours.
Okay, so this is, I'm glad that some people are still here for this discussion. It's not something that we have explained maybe in some of the guidance that we've given out. We've heard that some schools have treated the scheduled hour calculation as this, so let's say you're doing a payment period by payment period calculation.
And we do have to take attendance.
Right. So some schools have said that you don't start counting scheduled hours in the second payment period until the student completes the first payment period, and that's just not right. The scheduled hours are counted, and again, it's this difference between completed hours and scheduled hours that it's important here. Scheduled hours are scheduled hours. Whatever you have that you've published that is set up for the student, as time passes and they're scheduled for those hours, they just keep accruing. So I'll give you an example. In the payment period world, yours is a little different because it's period of enrollment. Let's say a student had 500 scheduled hours at the time of the withdrawal. The student had only completed 400 at that time. Well, that student is still in the first payment period, so you're going to do a return of Title IV calculation for payment period 1, and it's going to be 450 over 450. Now let's say that student had completed 451. Then you simply take 500 minus 450, and it's 50 over 450 for the second payment period. That just keeps adding up. That's how scheduled hours work.
So I don't have to go back and do it from the date they hit 450 actual hours.
Nope. Scheduled, and it's even easier in your case if you're doing a period of enrollment because
May I email you and get that
Yeah.
in writing? Thank you.
we can do that.
Would you mind telling me who you are?
Oh, sure. Here,
sorry.
let's go forward. It's right here at the top one, David Musser.
David.
Yeah.
Thank you.
I would also ask that you include me on that. I work
Yeah,
with our
and-
third-party servicer group as well, so
Yes.
if it's a third-party servicer thing, we can
Yeah, because
maybe help you.
Yes.
they might be stating this with other schools. So we want to make sure they have the right
Okay, so
information.
here's another question, because some of them that we've done, we have been really cheated a lot in our hours, because they said the student couldn't have completed 300 hours. They were only at 450, or 470.
So because this is not described fully in a lot of our guidance, a reasonable person could take either position, and we understand that. So we have actually told our friends in program compliance that if this issue comes up, that no liabilities would be incurred. There's not a finding if you're following that other method, because like I said, some people have interpreted it that way. So we, in presentations, we've been telling folks that this is how it works, and so we would like you to do it the way that I just described, and that's how we'll answer you if you send us an email. But you don't need to go back and make changes to the older cases. You can. And we would also permit you to do that after you have this information from us.
Because this would actually help the school because of the 200 hours behind.
Yep.
Okay. And so I can redo an R2T4 in that situation?
Yeah, you have to be careful that when you disperse the funds, if you're redoing something, that you still fall into the late disbursement time frame. So it's like 180 days from the date that they became ineligible.
I'm
So
gonna be a busy girl going back.
that's a ways back. So yeah,
All right,
but
thank
that's the time frame.
Okay, thank you.
Yep. All right.
One
Thanks
more.
everybody.
If you want to come up,
If you guys
we'll-
want to come up, you can. We want to vacate the room soon.